Hey, this is Chris Miles here, anti financial advisor with Money Ripples. I want to show you how this insurance agent, infinite banking insurance agent, lied to my client. In fact, it even didn't just lie, but was about to cost my client $80,000 in the next 10 years and hundreds of thousands of dollars over many years because he was just trying to make a commission. This is something you've got to watch out for, especially when you're comparing infinite banking numbers. They're not always apples to apples, and they can throw you off. And just so you know, my client is a very intelligent man, a great guy, just an amazing person. No, he's even a real estate investor, owns companies. He's no idiot. But when they're not sure what they're looking at, that's the problem. And so let me show you exactly what this this insurance agent did. So here's the numbers. All right. So this is the one that this other insurance agent sent. He said, "Hey, let's cancel both of your policies you have with Chris Miles here. Let's cancel both of them. Let's get rid of them. Take out the remaining cash that you're not leveraging because he had borrowed some of it and was already using it for investments. But he said, let's just take all the remaining cash, which is about $21,000, and then add that to a $25,000 a year max." So he was trying to show what he was paying into one of his policies at $25,000 a year, but he was trying to show it how it's supposed to be like apples to apples. But he was canceling both policies. By the way, both policies had a much bigger death benefit, and you'll find out here even more cash value. So see that year one, he has $26,000 in there, and that's after all that 21,000 moves over, and he adds another 25,000 only to have $26,000. But on the flip side, on my policy, now my year compared to his year one is actually my year three when he actually puts in that next $25,000. Notice I have 41. Now remember, he put in $4,000 more. So really, he only had like 22,000 if it were apples to apples, while mine has 41,000. That's a $19,000 difference already from year one. Now, if he were doing something that would work to his favor, it would mean that over time, the numbers would get closer and he would eventually make more money in this new policy. If that were the case, I deserve to be fired, right? But here's the thing, we're 100% committed to know that people won't beat our numbers. If at best, people may match our numbers, but it's such a tiny percentage to ever do. It's so rare, we just don't see it. It's very rare. So watch. Now, for me, remember his year one was our year three. So my year seven would be his year five, right? Notice I have 157, almost 158,000 in there. In his year five, $114,000 in there, minus the 4,000 extra that he had him pay in that it wasn't being paid into my policy. And guess what? 110,000 versus 157, almost 158,000. That's a 47,000 plus dollar difference. It didn't get closer, it went farther away. Now, here's this crazy. Now, eventually, my premiums go down to about 5,900 a year. So even in year 11, which would be his year eight, I have 219,000. His year eight has 195,000. It actually takes him till year nine. He has 226,000. Actually, sorry, year nine is my year 11. 226,000, 219. Here's what he had to do. He had to pay 25,000 a year while he's paying 5,900 a year to mine. That means he's paying $19,000 more a year to that other policy, plus the 4,000. Guys, that's exactly $80,000 more that he paid in just so he could finally beat my numbers by a few thousand bucks 9 years down the road. That is a lie right there. That's horrible. So when he said, "Well, yeah, the guy told me I would have more money," and of course, over time, I had more money. Why did he have more money? Because he had to keep paying 25,000 a year to get more money in, while mine backed it off, and really it's self-funded even before that time. He could stop paying altogether. So it was already paying for itself. So of course they had more money because he had to throw in more money to offset the extra insurance cost that he's paying. That is exactly what you want to avoid. You do not want to pay more to get less. And that's exactly what he was doing. And I had to ask him. I said, "Friend, listen, you have a choice to make. You can go with this insurance agent and he's a friend. I get it. You see him at the barbecues from time to time. You want to keep things on good terms. First off, if not doing this doesn't keep you on good terms, you have to question the relationship. Secondly, what will you tell your wife and your kids when they say, 'Wait a minute, dad or honey, you paid $80,000 more into this? You cost our family $80,000 more just because you wanted to do a policy with him? Is that worth it? And I had to ask him, who do you prioritize? Are you prioritizing your friend or your family? Because you're taking away from one of them. Because that extra 80,000 you're paying is going to your friend's commissions, not to your family, not to your legacy that he's trying to leave. And he's a big guy, loves charities and Christian type of values. He wants to leave a legacy. Why would he sacrifice that to just go with his friend because his friend says it's a better deal? That was horrible. And I told him, I said, listen, I know that he will never beat this policy because I can't even beat my own numbers now because you're a couple years older. You're cheaper then than you are today. I can't even beat those numbers because we always ensure that we give you the top best dollar out of all these policies. That is our commitment. As always, if you want the highest cash value with the least amount of money going in, and you want to make sure that you get the best return on your investment, that's why we refer to it as max ROI, infinite banking. If you want that, we are the ones that do that. If you want to see how that compares to what you've been shown, or if you just want to see how that works in your situation so you can double dip on your investment returns and make money in two places at the same time, reach out to us at moneyripples.com